What's up everybody? Welcome to the Stocks channel. Today the stock market had a lot of intraday volatility, but overall we are still in a form of consolidation in a trading range as we approach CPI data. So today I'm going to talk about everything you need to know to be prepared to trade the CPI data report tomorrow. So first up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So today SPY was up 0.12%, and intraday we did have a lot of volatility because we did come all the way down here towards this support at 514, and then we bounced all the way back up to close back above all the moving averages and maintain the bull trend, but we are still below this resistance at 520. So tomorrow is CPI data, and while I don't necessarily think it is a big deal, the market will use it for high volume trading. And I do want to tell you, for these events I typically go into them very cash heavy, but I am carrying long swing positions in the trades that we're doing in the Discord server because I do think while we're in a bull trend, there's no reason not to have long swings open. But as a price action trader that wants to react to what the market does, I do need a lot of cash. And today I'm going to talk about the scenarios of why cash is important and it allows us to react to what we see in the price. So first and foremost, I want to delete the arrow because I don't want any expectations of what I expect to happen for CPI data. And the first thing you need to know to get bullish is that we will need to see SPY breaking above this level after the report, which is the resistance at 520. And if we can break 520, there's a good chance we just go straight to the top of the range and a new all-time high at 525. Now, if we don't make a brand new all-time high, we should find resistance right around 523.4. And then again, if we find too many sellers, that could be the top of the range before we see more selling and come back down towards support. So very simply said, the bull scenario for tomorrow is whether or not SPY is above 520, and if we are above 520, we have the price target at 525. Now in the bearish scenario, we need to break all of this support and we need to finally come down here and break the low, which is right around 512 to 513. And in that event, we should break down below the bottom of the range and we should finally see a test of the rising 50 EMA, which is that support at 507. And of course, with a bearish lower high rejection, if we do make a lower low, there's no guarantee that support has to hold, and there will be the opportunity to go lower. But I do want you to look at the Bollinger Bands on the daily chart, and you can see 507 is significantly outside the lower Bollinger Band. So going into tomorrow, I do think there's more reasons to be bullish and less reasons to be bearish. But obviously the market doesn't care what I think. I just think the odds favor that we will go higher. So if we're going to go higher, we should see the gap up above 520, and there should be plenty of opportunity to react to that price action throughout the day, which means you'd be looking to buy the dips as we go higher towards 525. If we start to gap down and lose the support at 514, there's a very good chance we're going to break to a new lower low down below 512 and hit the target at 507. But that would likely take us closer to the end of the week if we are indeed going lower. So I do think there's a better chance we're going higher, but you need to be prepared for both of these scenarios. And in the very odd scenario that we don't break the range, then you're simply trading the range between 514 and 520, which means you're going long at support and selling at resistance until we get a clear breakout. Remember, we're in range trading, so we're not expecting a strong trend up or down. We're simply buying at the bottom of the range and selling near the top of the range and working that range while we're going nowhere. And this is how we are continuing to grow our accounts while the market is just going sideways, by being very selective in the stock pickers market on which stocks we're going to trade, and then also taking advantage of being a retail trader who can move like water and get in and out of positions at support and resistance. So if you're in the Discord server, you know we are absolutely crushing this market, and we have been absolutely crushing this market all year long, and we are going to continue to crush this market by simply following the chart and staying objective and having the best risk reward setups. So going into tomorrow, I do think it's going to be a very simple trading day as long as you're not extremely biased to any directions and you're open to following what the chart is allowing. And until we get a break of this range, it is going to remain choppy, and then hopefully we can break the range soon and get a very strong trend, and then we can go back to swing trading. Day trading has been very effective in short-term swing trading while we're stuck in the range, and then once we break out of this range, I do expect a trend to return to the market, and that will be a lot better for longer-term swing trading. On the Nasdaq 100 triple Qs, we were up 0.37% today, and once more, we're deleting the arrows today because I want to talk about how to trade the CPI data, and tomorrow for the triple Qs, it's as simple as the break above this resistance at 442.65, and if we break that, we should go to the top of the range, which is going to be up there at 448, and if we break that, we go to the brand new all-time high up there at 453. Now in the bearish scenario, we need to come down and break all the way down below 434 to 435. And if we can do that, that would send us all the way back towards this gap fill zone and support between 425 and 428. Now, as I said with SPY, the lower Bollinger Band is not currently allowing us to go that low, so it would not happen in one swift motion. It would likely take multiple days to go lower. And again, we have the bull trend with the price action above all the moving averages, which favors that we should go higher. So going into the CPI data tomorrow, both of the bulls in SPY and the triple Qs are poised to push higher, and it's simply going to be a gap up open above resistance to confirm we're pushing to the top of that range and possibly even breaking out. So going into tomorrow, we definitely are looking for the bullish price action above the resistance, but if we don't get it and we start to gap down and lose support, then we're prepared for the bearish scenario as well. On the Dow Jones, we were down 0.07% today, and once more deleting the arrows. And on the Dow Jones, we really have gone absolutely nowhere, going all the way back to the middle of February. We have just been chopping around sideways, and the resistance we need to break is at 391, and above 391 we're looking for a gap fill right around 395 and a push to the top of the range right around 397 to 398 and a brand new all-time high at 400. Now if the bears take over, we will break down below 385. These Bollinger Bands will start to expand and will start to push lower down towards 377. So your critical support is 385 and your critical resistance will be 391. So it's a range until we break out of it. And then you know the price target to the upside if we break to the top of the range, and the price target to the downside if we break out below the bottom of the range. On the Russell 2000 IWM ETF, we were up 0.39% today, and price action did close back above all the moving averages. We do have the bull trend, and we're sitting right here at resistance at 207. So above 207, we'll be looking for a push to the top of the range at 210, and then the price target at 214. And if we break the bottom of the range, we need to break down below 203 and this support right around 202, which is the rising 50 EMA. So if we break down below all of the support below, then we'll be looking for a push to the bottom of the range at 199 and a lower price target at 196. On the ARKK ETF, we were up 1.08% today, and we did get a second day in a row back above the 5 EMA. So we aren't confirming the double triple top. And this means from 47, we could push all the way back to the top of this range right around 50.7. If we break that, then we're looking for 52.3. And then if we break above that resistance, we invalidate the double triple top, and then we push higher towards 54.5. If at any point we break below 47, we're looking for a push lower towards 45 and then 44. On the VIX, we were down 1.38% today, and we continue to confirm that we're following the arrow, which is that in a bull market, we simply had a pullback before the VIX crushes back down to 13. And this does go hand in hand with what I said on the indices, that we would likely push higher after the CPI data, which means we're going to see the VIX continue to crush lower. So look for that opportunity for the gap up above resistance and the crushing of the VIX to confirm you should be staying bullish. If we get the bearish outcome, I'm expecting the VIX to spike higher, and that's going to likely take us towards 18 to 20, and that should be enough fear to send us down below support. But again, right now the bulls have the advantage. On Bitcoin, we're currently trading right around 69,000, and we are getting a decent high volume selling day after what could be a false breakout if we cannot hold this support at 68,000. And if we can't hold 68,000, we go to 65,000, and I told you if we couldn't hold 65,000, I think we flush all the way down to 52,000. So definitely start getting risk off if we start breaking support, but you could stay bullish above 68,000 or 65,000, but I don't think it'll be a good idea to stay bullish if we break those support zones. Again, even if we do go higher, I think we're simply going to 75,000 before we're met by more sellers, and I'm not one of those bulls on Bitcoin at this time that thinks we're going straight to $100,000 or higher. On Nvidia stock, we were down 2.04% today, and we are starting to get some weakness down here near the neckline, which could be a double top rejection if we start to close down below 857. But again, we do have very strong support right around the gap fill at 823 and the rising 50 EMA, which is now right around 807. So I do think you could buy the dip, but this could be a falling knife, and the double top could take us all the way back down towards 780. So just be aware of that, and you will be wanting to manage your risk at the 50 EMA if you are catching the falling knife. Now keep in mind, this is a very bullish stock, but that doesn't mean it can't go through a correction, and we currently are in correction territory. If you take the high to the low, we're down about over 13%. So that is a correction, and within a bull market, that could be all we get before we continue higher. So I do think there's a good chance, even if we do go lower, we could still go to a new all-time high later this year. And then, of course, that target I told you would be between 994 and 1032. On Tesla stock, we're up 2.25% today. So we're continuing the bullish scenario that I told you we would likely get after we saw the tweet from Elon Musk. And today we did confirm the breakout above 173, which tells us we should push higher towards 183 and then 187. Now keep in mind, these Bollinger Bands are very squeezed, so it could take time to get there. So as long as we're staying above 173, you can stay bullish. If we can't hold above 173, then we need to hold 167. And if we can't hold 167, this is likely another lower high before we head down towards 154. So 173 is our critical risk level for the short term. And then if we're going to continue to push higher, we're looking for the upside price targets at 183 and 187. On Apple stock, we were up 0.72% today, and we continue to build out a very strong base of support at 169. And I do believe this is exhausting all of the sellers, which means we're likely going to get a giant double bottom off of 169. So I do think you could try to catch this falling knife if you don't mind managing a risk on a falling knife between support at 167 and 169. This could be very rewarding, and today we did get some decent volume on a bullish candle coming off of the low. So all we need to see from here is a confirmation that the bottom is in, which is going to require a break above 172, and then I do believe we'll be well on our way towards the higher price targets in the 180s. But obviously we'll take it day by day and step by step, and right now I think you should be bullish at these levels because it's very low risk to do so. If you don't want to get bullish until we have confirmation, then you need to wait for that break above 172. So jumping back over to the S&P 500, tomorrow should be very volatile and a very exciting trading day, and it should set the tone for the rest of the week. And right now I do believe the bulls have the advantage, so just keep that in mind. And if you're still extremely bearish and it hurts you to see the market go higher, you just need to check your bias at the door and follow the chart, because once more, this is a bull market and bull markets like to go higher, and we've just been consolidating, so there is a lot of energy building up, and we are about to see a very large leg in this market. Whether it's up or down, we couldn't care less as traders. We simply want to be on the right side of the move, and that's why I talked about the critical levels. So manage your risk at the critical levels, be unbiased, and if you want to come crush the market with us, then come join the Stock Channel Discord server, where you get access to all of my intraday updates and technical analysis, as well as my trade ideas. We are absolutely crushing this market, so if you want to join the Stock Channel Discord server, you can find out how to join by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.